Great evening, fellow traders. This is Austin on Sunday night, April 27th. Last weekend of the month, we have an action-packed week coming up. Let's see, there is the two-day FOMC event, starts Tuesday, announcement is Wednesday, and then we have the monthly non-farm payroll report on Friday. So there's quite a bit going on. In front of us is a daily chart of the NASDAQ 100, the NQ, and I have a retracement grid here. This is just a garden variety fib grid, 78%, which is a line in the sand. It really is important on a number of levels. And then 62%. So taking a look at this most recent swing, which is the month of April, pretty much took them down until this infamous Wednesday here where they sold off and then snapped back hard. And that created an ugly yet contextual morning star pattern where you had bearish, neutral, and then bullish, especially that it started bearish and went bullish. And that portends a move up. And it did that until we had this most recent 3-day stretch here where, if you want to get technical, there was an engulfing candle or an engulfing session that ate up these 2 days, so it erased those, and then the next session went down. So there's that from a candlestick standpoint and a daily range standpoint. From a retracement standpoint, they came up, they tested near the 78%, failed to break through, and then back down below and closed lower than the 62%. So all of that said and done, the most likely scenario that I see is a retest of the lows at some point. And if we want to do trend line analysis, there's that. There's 3 points of contact, 1, 2, 3, and you can see the price failed at that line of contact and kept coming down. Now, what else connects? Well, let's go from these lows here and try to make some sense. Well, there's not really a lot of relevance there. What about here? You see some relevance there if you kind of fit that line a little bit. Daily contact point, daily contact point, daily contact point, daily contact point. So we could say that the market is looking at that level there as some measure of support, and I would bet that is probably 38%. Yep, it is. If they close below here, they close below the 3,600 level. The 3,500? I don't see as good as I used to. I'm almost 50. Give me a break. Then probably coming down, and they project way down. They project a couple hundred points lower. So the NQ, and we did some of this before. The NQ has some downside work to do. In my opinion, they're going to retest those lows, at least down here in the 3,400 level. S&P. There it is. Took the liberty of snapping a grid here. You can see price did something similar, came up into the 78% and then stalled and came right back to 62. Now the S&P held relatively higher than the NQ. It didn't have 3 days of a sell-off. It had a doji day here, quite frankly. Same pattern here. This is a morning star where you've got bearish, neutral, bullish, which engulfed that, and they took them up. But now we have bullish, neutral, bearish candles, this on a daily chart, and this is a 3-day, I'm sorry, this is a 3-bar pattern. No matter what chart it happens on, it's at least 3 bars where you've got a bias going one way, and then you have a neutral bias, and then you have a change of direction bias, and that portends lower. All right, so if they go lower, then the next point of contact would be about 1820, I'm going to bet. About the 1820 mark. And let me see here. That takes in quite a bit of this congestion. These are all daily bars, and you can see the points of contact all through here in that section of time, and a little bit there and a little bit there. So along with this trend line. So I would expect the 1820 mark to be magnetic on a retest. I'd look for that. It's about 40 index points lower. We don't know when, but that is the what. Most likely to come down. If they come up and they take out these highs, then sky's the limit once again. If the market finds the wherewithal to do that. Russell, now mind you, the S&Ps are the strongest, or most bullish, if you will, of the indexes. The Nasdaq's ugly, and the TF is too. Well, I should say they're bearish, and they're neither ugly nor pretty. They are what they are. Same evening star, a bearish 3-day pattern. Strength, neutral, weakness, and the weakness overwhelmed the strength, and then we had this session down here to finalize. So that is what we see here. That's what I see in the markets. Most likely for a retest of the lows or lower. The TF is weakest relative to the S&P. I'm just matching up points of contact here. There are points of contact, and then that. I would expect they're going to come down to and this ain't Nostradamus here, 1105. We could easily see that by the open on Monday. If pre-market futures are up a little bit, up a couple of points, 2, 3, but we could see this early on Monday, or we might not see it at all. For all we know, they're going to hold the 62% on the bull side and then take it up, and away they go. It just doesn't seem likely. We're in a downtrend, and of course, if you look at everything that's going on, here was the sell-off in February, and then the subsequent recovery, and then all of the, for the most part, the big sessions and the volume have been down. So, this is the kind of churn that you see in a downtrend early, and I think what we're seeing here, well, I know what we're seeing here reminds me of 2 other times when the markets were topping about this time of the year in 2000, March, April of 2000, when they topped first, and then 2007, 2008 when the markets topped again before a big decline. So that's the way it appears to me. It looks like the market's struggling to go down. It's not going up. It's struggling to go down. There are unseen forces trying to pin it, but if momentum takes over, then down she goes. So I'd look for 1105 as a line in the sand, 1090 soon after that. And the way I'm trading this this week, same way I tried last week. Last week I tried to, and I was focused on the Russell primarily, and I tried to step into sizable positions into directional moves. They blew away early in the morning before I could really put on any size. It was just real dramatic moves, especially Thursday. So, and then Friday was staccato enough so that it kept pulling back, that it wouldn't quite let me, step into sizable position I was looking for. But I'm going into this week, with the exception of Wednesday, I'm trading that same way. I'm looking for, and it doesn't matter if it's up or down. We could get a pre-FOMC squeeze. There's Tuesday, which is notorious for being an up day, and then Tuesday is the day before the FOMC, and Tuesday is the traditional window dressing, end-month window dressing session. So, if they start taking them up Tuesday, I'm going with that. If they start taking them up tomorrow, I'm going with that. But, basically I'm just going to follow my reads without a bias on the intraday side at any moment in time. If the charts are bullish, I'm going to be on the long side. If they flip bearish, I'm going to be on the short side. I'm just cognizant of the fact that the short side probably has momentum and maybe even trend behind it, and so I would look to catch a little bit bigger rides there. But overall, my strategy is I'm looking to pile on contracts in scaled fashion. So that would be, enter 1 or 2 with the traditional risk. If stopped out, so be it. Enter those 1 or 2. Price action works directionally in my favor, and then it kicks more signals, and then I would add to those positions so that I would have some amount of trade size on that. And I'm going to split my focus equally as best I can across the Russell and the S&P. So rather than have like an 80-20 or 90-10 focus, favoring the Russell, and then left over to the S&P, I'm going to shift that to about a 50-50. I'm going to trade them equally as best I can. So that's the game plan for this week. Trading both symbols in equal fashion. Trading to look, specifically looking to put on size, to scale in size, and hopefully if they roll over and start heading lower in what would be a trend continuing fashion for this moment in time, hold for a little distance. I would like to hit a triple or a home run trade or two or so. See how it goes. Hope this helps. See you in the trenches, and as always, best trading wishes.